All right. So once again, good evening. We are on the second section today. We're gonna speak about our discussion today is social security. Just like we said, I'm just a moderator. We are trying to have a discussion on how to pass our life insurance licensing exam. And today we are going to deal on topic social security. How does it benefit you? How does it benefit your retirement? How does you put social security into a retirement? All right. So once again, good evening. Sorry, there's something wrong. We are on the second section today. We're gonna speak about our discussion social security. Just like we said, I'm just a moderator. We are trying to have a discussion on how to pass our life insurance licensing exam. And today we are going to deal on topic social security. How does it benefit you? How does it benefit your retirement? How does it put social security into a retirement? All right. So once again, good evening. Sorry, there's something wrong. We are on the second section today. We're gonna speak about what it could social security. I just All right. So sorry, we are back. Is everybody hearing me? Hello? Is everyone hearing me or see my screen?
I hear you and I see your screen.
All right, that's good. So
Yes.
sorry, still about the H. Just like what I said before, we are dealing on social security today. What is social security? How does it affect you? Of course, unfortunately, everybody, including me, plan my social security for retirement. That's just a basic truth. So, but it's left to us to now redirect our our view about social security. That is not only, you cannot rely on social security for your retirement, it should be part of your retirement. So you cannot rely totally on social security. Believe me, almost 80 or 90% of people today rely on social security for their retirement. And quite unfortunately, it's not going to be okay. Social security plus. So for your retirement, it should be social security plus other broader financial planning strategy. If you don't have it, you're not going to have a good retirement. That's the basic truth. And we, in the morning, we try to find out how Social Security is founded. And before now, we know Social Security as old age survivors and disability insurance. It was an insurance, it was a social insurance, it was government insurance. Why then was designed mainly for who? For benefit of aged ones, elderly ones. That's what it meant for. Is known as Old Age Survivors and Disability Insurance Program. That is the full meaning of Social Security. Before when FICA payroll taxes were introduced, the now call it Social Security. If not, then it wasn't Social Security. It was known as Old Age Survivors and Disability Insurance Program. So because the FICA payroll taxes was introduced, now they changed it to Social Security. So it's never once planned to take care of you. It was meant to take care of the old people, those who are disabled, and the survivors. That is the only thing it's meant for. But now we have everybody gears towards retirement using Social Security. Is it good? Yes, of course it's good. But however, it is not enough. We went ahead to talk about the funding of Social Security. We say Social Security are funded using three ways: the
The employer,
employee, the employer, and the
employee,
self-employed.
and the self-employed.
So these three people are the people that fund Social Security. And for the employee who are being depleted, what I mean, employees now have reduced. Let's take, for instance, most of the grocery stores. If you go there today, you see that it's no more people on the counter checking you out. Everything is done manually. Everything is done by itself, self-checkout. So you see that you removing all the people employed to be checking people out at the grocery stores, you now do self-checkout. You have reduced the number of people who's going to pay to the Social Security funding. If you check it out, averagely 55 to 60% of funding from Social Security come from the employee. And the employee are being reduced, one, by the very good technological development that comes around.
By the minute. Mm-hmm.
Taking over everything. And almost every year, every daily and day out, see new innovations coming in to take over the job physical human being will do. So in that case, what happened? Number of employees that will be contributing to Social Security is drastically reduced. And if 60% of funding comes from employee, now what happens if those employees are being reduced from doing what they're supposed to do to be able to pay Social Security? So we went ahead to know that for you as an employee and employer, that you will pay 7.65% to Social Security and Medicare. Then the self-employed pay that 15 point something percent. So those are the contribution individually they made to Social Security. And again, we discussed that Social Security are being funded only by these three people. Government do not fund Social Security. Government do not fund Medicare. So these people, three people are the people that fund Social Security: the employee, employer, and the self-employed. So that is the discussion we have on Social Security in the morning. We contribute 7.65% of our paycheck to Social Security and Medicare. Social Security funding is 6.2% from our paycheck and 1.45% for Medicare, also from our paycheck. Generally, we contribute 7.65%, the employee and the employers. However, a question will be raised, why do the employees and employers contribute the same percentage? Why? If the employer and the employee contribute the same percentage to Social Security, you ask why? Or could only the government can answer that. Then the self-employed contributing 15.3% of from their paycheck. So there are individuals, those self-employed may be those who employed people like me and you, but probably they own the company, you know? So they are the self-employed. They contribute 15.3%. Then the employers contribute 7.65%. Me and you as employee contribute 7.65%.
Same thing, 7.65.
Those raise a question for you to answer. And the employee is more than the employer. The employee is about 60% of the contributors. So that will tell you that Social Security with time may be a problem. Of course, I think nowadays they introduce, the president introduced this contribution he made to every child born. I think from this January, it's a $1,000. go to a special account where the parents has the right to contribute to that money, to that account too. So invariably, that child's retirement begins from the time he was born. So as you, employee, you're working, your own retirement plan supposed to start the very first time you get into a job. That is when you're supposed to start your planning for your retirement.
But you
Anything,
know that was going on in New York before.
it was going on.
Yeah,
Oh,
where mothers were getting that money for the kid to put aside.
do they give them the money or do they put it in a special account? Now they put it in a special, they don't give them cash.
They used to give them in check.
No, I think that's not good. Giving them a check is empowering them negatively. But putting, to me, that's my own understanding. Putting in a special account
yeah,
where
that's
the
true.
parents can contribute is good.
But that's what it's for the child.
Yeah, it's for the child, not by giving it to the parents. If you how many parents did you give it can be able to go and invest or put that money in a special account? They will not. But for government to directly open a special account where the parent himself or themselves can be able to contribute that account, don't you think that one will be work better than giving them a check?
Yeah.
So in other words, they are trying to prepare their retirement, which is so wonderful. So we know that Social Security is an insurance, social insurance. Because it's social insurance, you have to be fully qualified, fully vested, fully insured. And for you to do that, you must have worked for at least 10 years or 40 credits or 40 quarters. You must have worked for 10 years for you to be fully insured. That's what we learn in the morning. So if you're fully insured, then you get a good benefit. However, we come again to discover that for you to start getting benefit, you must have reached the age of 65 years. 67 years. That's when you get the full benefit.
Without any
reduction. If you begin to receive your Social Security before 67 years, there will be a 30% reduction. 30% reduction if you start taking it before 67 years. Then if you take it at the age of 67 and upwards, what it means now is that you took your normal money, no reduction. Now, if you start taking it at the age of 70, which is called age of maturity, you
124%.
Yes. No, from 67 up from 70 is 124%, which means if you start taking it from 70, you have what? 24% added to the main money, which means what we're getting is 124%.
8% a year for the 2 years.
Then if you start taking it from 67, or you start taking from when you are 68, you'll be getting 108%. So you get to 68, you get 116%. Then to 70 years, you get 124%. So the question now, for those of us that like to take their Social Security on time, if you start taking it on time, then you are reducing your money by 30%. And that 30% is no longer going, you're not going to see it. It has gone to people that help you to keep the money till now. So indirectly, you pay as you go. What I mean by that, the amount you collected is what you're going to collect. It's like a premium. Premium you are paying to your insurance. That's what it is. Because remember, it's a social insurance. So if you are collecting putting $100, when you reach for benefits, you can exactly get what you put in is what you get. So based on that, the amount you are earning when you are working justifies how much you will get when you start receiving your Social Security. If you are doing a high-pay job, means that you are putting more. What it means that you're gonna get more benefits. So that's what it is. All right, I think that's what we did in the morning. Now, yes, that's what exactly what we do in the morning.
68%.
Yeah, this is a percentage for you.
Mm-hmm.
FICA tax. FICA is if you go to your paycheck, check on the card on your paycheck, you will see FICA, FICA tax. That's where you see all this. The employer is 7.6%, which is the person that's employed you. Your boss that owns the company is what? 7.65%. Then he contributes Social Security 6.2%, and he contributes 1.45% to Medicare. Now, you, the employee who was employed by this man here, you are the employee. This man I highlighted employ you. You contribute the same thing that he is contributing, 7.65% total, and he contributes 7.65%. The Social Security you are contributing 6.2%, and the Medicare is 1.45%. So the same amount you are contributing is the same amount your boss who owns the company where you work contributes. Now, come to self-employed, for those who are hard workers struggling to make ends meet, equally, they may employ one or two people. They are contributing the same thing. Social Security, they contribute 0.44%, and Medicare, they contribute 2.9%. So total of 15.3% from their check. So that is a self-employed. So left to me, if individuals, let's say, ask question, I think all of you here may equally want to ask questions. But that one is not is above us. So the employee pays this plus this. So if I'm you, what I do to get this in on my head, I can just take a snap this in quickly and put it so you can review it on your own. So Medicare portion has no wage cap, while the Social Security portion does. So that is the key point you have to know. Again, let's go ahead. And we talked about taxation. Of course, we have equally said something about taxation. The benefit you get depends on what your income. Your income is taxed. This income is taxed before your paycheck is issued to you. That's why your paycheck become non-qualified, sorry. Your paycheck is now non-qualified because what? It has been taxed. They tax it with FICA and remove the tax they pay to Social Security and Medicare. So if the taxes they pay that, then the remaining one is what they give you, and that they give you become unqualified because tax has been removed to that area. So if you use that money they give you now to pay for your policy, which is life insurance, you're not going to be taxed. That's why life insurance is tax-free. You use it to start an annuity, you're not going to pay tax on it because it has been taxed. The only thing you're going to pay now, tax on it now, become the profit or the interest made on the annuity. Even in the bank, you put your money in the bank, you're not going to be taxed. But if there's any small interest on that account, you put the money you put in the bank, they will tax you on the interest. So why? Because you have already paid the tax on the FICA. So that is just the meaning. So regardless of your income, 15% of all Social Security benefits received will always be 100% income tax-free, regardless of your income.
So, sir, what of those that work with 1099 in this case?
All right, those that work 1099, you see, you are now given the opportunity to tell us what you spend, what you earn, and what you spend. Remember, government tax you on profit.
Yes.
So you only, even the tax, like now, this is a season to file tax. You are filing tax. You are filing tax. They will do the expenses minus the profit. The what you get minus the expenses. We give you the profit. The tax the profit. So for those who are getting 1099, you are given the chance to tell us what expenses you do on that for 1099. Let's assume you get. Let's assume you get 10,000 on your 1099.
Yes.
10,000 on the 1099. Then the government want to know, upon that 10,000 you get, how much did you spend on that 10,000? If you eat, you say from this 10,000, I'm going to work and I buy fuel. So fuel money come from that 10,000. Oh, my car is spoiled. Car that's taking me to work spoiled. I fix that car. It's from that 10,000. Oh, I want to I buy pencil to work. I buy shoe to go to work. It's from that 10,000. I buy coffee from that 10,000. Fuel from that 10,000. I pay my phone because I have to receive call from my boss. It should be from that 10,000. Oh, I do not use car, I use flight to go where I'm going. It should be from that 10,000. So when you do all those reduction, you bring out what you have spent on that 1099, you give you a tax paper. I mean, the person who's preparing tax for you. So
Yeah.
minus the income from the expense. The remaining one is what government will tax you on.
Okay.
So that's why some people will say they need 1099 because they can be able to tabulate what they have done. If you look at it critically, let me tell you the truth. Let's assume you have been paid check. I mean, you pay with, they'll give you figure. They pay you not by check. They just give you your money. They pay you through the normal way they're paying.
Yeah.
You did not remove anything from there. Government only tax you on the interest. I mean, the government only tax you on the Social Security and Medicare. But the expenses you made on that job was not taxed. Well, you didn't bring it out. That's the truth. You go to job every day.
Yeah.
You use your car. There's wear and tears on your car. So all those things is something that should be included if you are given 1099. But this one that they give you the check, they have removed already the figure taxes have been removed. You do not bring out your expenses. You did not. So the 1099 give you the leverage to be able to bring out all those you have spent. But how do you do that? It's very difficult to get all of them. But some people meticulously make sure that they get every dime spent outside that from that money. Some people go and open up one credit card and using it for all the things. So that when that time reach, like now that filing tax, you just go log into the credit card, bring out all your expenses and give your tax preparer to do it, to do your tax. Then it will be very easy for the person that is preparing the tax because already have seen your expenses. But what the tax preparer do nowadays, they just allocate expenses to different portfolios. Most times they are bound to be mistake. You may not even get all the expenses you did for the year. You cannot. But if you have a single credit card, that will help you to be able to know all the expenses you did. Let me tell you one thing. We are giving champion board this week. So we prepared a flyer. I went to where I supposed to pay for the flyer, the one they printed for us. I get in there. I forget to go with the business card. I did not pick it. I keep it. I come back. Because if I'm going to pay with my own private money.
Credit card. Okay.
My own card. So if I pay with my own card, where did it go? It go to me and it will not be counted for. I tell the guy, so, oh, I'm sorry, I didn't come with a business card. Keep it here, I'll come back. I have to go home and get a business card. Come and get it.
Okay.
Because that is business expense. So the same thing happens when we tell you that if you have a small company, if you have a small thing, you can be able to do key employee and executive bonuses. That is what it is. So if you do those key employee policy and executive bonuses, the company will pay for it. And at the end of the year, those payments will be seen as a company business expense. It goes to your expense, minus it from the profit you made from what you made the year. The remaining one is what the government will tax you on. So all those things something that all of us should begin to cultivate as a habit. Because if you're not doing the right thing, that's why some people will say they're paying the fair share. Probably if you're not paying the fair share, then because of lack of knowledge. Yeah. In fact, I discovered something today which I've not liked to share because we are live. I would not like to share it. I would have loved to share it for everybody to be able to know what to do. Very serious issue.
Thank you.
Concerning our mortgages. which I would like to share any other time, but not now. All right. So all of us should be aware of all those things. It's a knowledge that you must have, a knowledge that will help you and your family. It's not only about the we are inside the insurance business to be able to educate people on how to live and do the right thing. Because surely you must pay your tax and you must pay your fair share of the tax. Yeah, it's government law that you must pay your fair share of the tax. You must. You cannot live without paying tax. It's against the law. You must pay your tax. But are you paying your fair share? All right. So we did calculation of benefit, how to calculate benefit. We say it's three ways. We say one is average index monthly earning, primary insurance amount, PIA, and the last one is what? The benefit adjustment based on claiming age. We have done that. We're not going back to, I'm just recounting for those who are not here in the morning. So if you look at your Social Security benefit based on age, you look at if you are collecting your Social Security at this age, which is 62 years, you are going to pay 30% reduction from your money. So if you see those who are so happy that I've started getting my Social Security, they are indirectly cheating themselves because 30% of will be deducted. That is it. So you'll be paid, you only receive 70% of primary insurance amount. You receive only 70%. Now, if you are 60, you start collecting by 63, there will be 25% reduction. You'll be paid what? 75% of primary insurance amount. Then if you start receiving when you are 64 years, what 20% reduction, you receive 80% of the primary insurance amount. Then you go to 65 years, reduction of 13.3%. You are getting 86.7% of your primary insurance amount. Then at age 66, you start receiving at age 66. I've started receiving my Social Security. You are removing 6.7% of your primary insurance amount. Then you are getting 93.3%. So these are the things we should be aware of. Now, the main time you're supposed to start receiving your Social Security should start from 67. At that time, no reduction. You are getting 100% of your primary insurance amount. 67 is the ideal year for you to start receiving your Social Security. 67, age 67. Anything below that, there'll be reduction in your primary insurance amount. Then, if you go ahead, you are so good, you start receiving when you are 68 years, you are getting 8% more, which means you are receiving 108% of the primary insurance. You start receiving at 69%, you are getting 16% more. You are earning what? 116% of the money. Then at 70 years, you are good. 24% increase, 124 of the primary insurance amount. So it's good to start receiving, going for your Social Security from 70 years and above. And actually, that's what it's designed for. When you retire, now the retirement age is 67 years. So you can add 3 years there when you retire before you start taking your Social Security. So there's one thing again we discussed in the morning about Social Security in terms of benefits, in terms of who we benefit when the two spouses, those who are not eligible.
When the spouse pass,
Yep.
and you have to just pick the one that pays the most, but you stated that you could have different people as your beneficiary instead of your spouse. Excuse me.
All right. So what she's trying to explain to you is what we see here, dual benefit liability, because we have a lot of people here, so I want to say it more so that everybody will know how it is applied.
Mm-hmm.
What the law says is this: if there is two retirement income benefits, two individuals, as for instance, husband and wife, two of them are retired, and probably one of them died. When he died, he did not die with Social Security. Social Security is still alive. So if one of them dies, automatically the one that is alive, if there's no beneficiary on that account, the one that is alive automatically become the beneficiary, which means the spouse is automatically the beneficiary. If one of the spouse died, the one that living is automatically the beneficiary. But the law says, since the other spouse who's still alive has reached the age to start collecting Social Security, he cannot collect his husband or his wife own and collect his or her own again, which means you cannot have a dual benefit. You will be allowed by law to collect one of them, which the one that is bigger, you collect it. You're not going to collect the two. So what does that tell us? It tells us that if you and a husband is there, the two of you have Social Security account. Of course, everybody that works in America has Social Security. As far as you work, you are fully employed. When you work for how many years? Work for 10 years, which means you are fully insured. If the person passes, his wife or the husband become the beneficiary. If there's no benefit, automatically become the beneficiary. So if that one that's still alive is up to the age, at least from 67 years upward, he cannot, or he or she cannot start collecting the husband own while her own is there. No. You have to check how much your husband will be paid and how much you'll be paid. Which one is greater? You will collect the one that is greater and the other one is forfeited to the government. So I think it's clear to everybody. So that's what it is. Of course, there are some of the things we said in the morning, which...
this Social Security benefit thing, must you have a job for you to be able to get it, or as an individual worker, like self-employed individuals?
All right.
And they pay their tax. So
yes,
where did...
as far as you're paying your tax, remember the individual workers, which means those who are self-employed, they pay more, 15.3%. So yeah, you have Social Security as far as you're paying the tax.
Okay.
You have Social Security, you have Medicare, as far as you're paying your tax. But the tax is not only the tax from your staffs who you employed. Remember, if you employ people and you are paying them when you prepare your
Yes.
pay for every 2 weeks, you're gonna do tax reduction, which means FICA, you're gonna pay their taxes. Remember that after paying them, you still come around to pay their taxes to the government. I hope you remember that.
Yes.
So the taxes you are paying is for them. You have not paid your own either. So which means you still have to pay your own 15.3%. Not that one you are paying for those workers. The one you are paying for those workers because you pay them their own, you pay them their money, you deduct 7.65%. Then as a company, our individual, you still have to pay us. So that's what I mean.
Thank you.
Yeah. So, but the most important thing I want everyone to go home today with is this particular one I highlighted, the dual benefit liability. You know, the way we said it in the morning is not the way we're saying it now. The dual benefit liability is what you should be able, everybody should put into consideration. Of course, have a beneficiary in your Social Security. So if one is not there, the beneficiary will come in. The beneficiary actually may not actually be your husband or wife. No, it can be individual people.
Can it be your child?
Of course, yes.
Okay.
Anybody can be a beneficiary. But what we are saying is that in the sense that the husband is there, the wife is there, provided the husband suddenly pass, then the wife cannot collect her own and collect the husband own again. No. It's not allowed.
But
So,
do you have to mention who is going to be the beneficiary, or it goes to the estate?
you go there to tell them who is your beneficiary is.
Okay.
If you don't have beneficiary on the Social Security, go now and correct it and change, put your beneficiary there.
Yes, sir.
Yeah. Then the husband too should go and put his beneficiary. It must not be the wife. The wife is working. Yeah, I think everybody understood. I don't know. I don't want to go far, but more than that. So if the wife should have a beneficiary, the husband should have a beneficiary. Then that works. Otherwise, If they can decide, of course, some two people can decide, say, all right, we can take one, let government take the other one. I think people can do that. It's still good. For anybody that prefer that, I think that is allowed. Yep. So social security disability benefit, we talked about in the morning. Yep. So look at the of it. Most of the thing we said now is come down to this thing. The key disability requirement commonly tested must be fully insured, must have 20 or 40 quarters immediately before disability, 5-month waiting period, must be totally disabled, not partial, must last 12 months or result in death. So let's look at Social Security definition of disability. We have said that in the morning, but I think for benefit of those who are not here, disability in Social Security is quite different from the disability you know. The definition you give to disability is not the same that Social Security gives to disability. For you to consider to be disabled means that that person is sick. That person has sickness that can last at least 1 year, or such sickness may lead to death. That's the definition of disability for Social Security. And that's when you can file disability benefits. So individuals are eligible for Social Security disability benefit based on their employment history. Benefits are only available to workers who are fully insured. When do we say you are fully insured? When you have worked at least 40 quarters or 10 years. That 10 years must not be worked in one place, please. That 10 years can be different places. It must not be in one company. It can be different places. But at least gather together how many years you have put in work and how many years you have worked where they are paying you. If you get it together, it's up to 10 years. Then you are fully employed. I mean, fully insured in Social Security, which means you have to get your complete benefit if you start receiving it from 67 years and above. So when you file disability in Social Security, do you start getting the money? No. You have to stay 5 months before the money will start. And that 5 months is what we call waiting period. So please, you can write it down. What is waiting period? Remember, we have a lot of periods in this exam review. I will keep on saying it. Whenever you see these periods, write them down. Because since there are a lot in the exam, they may confuse you. At least know what waiting period is.
That's the disability, that's 5 months, yeah?
Yeah, it's 5 months. The waiting period is 5 months. So if the person is disabled, the other person file with disability, you are expected to have a waiting period of 5 months. So the benefit will start after that waiting period has passed. Which means that person must have disabled for 5 good months before disability starts. That's what it means. That's virtually what it means. Since waiting period is 5 months, the person has to be disabled for at least 5 months before the benefits start coming.
That would be dead.
He said that would be dead. It's true. You're right. You see, I come to get to Medicare. I come to find out that if you have Medicare and you are admitted in hospital or anywhere that you require blood transfusion, the first 3 pints of blood that are given to you, Medicare is not going to pay. You're going to pay for yourself. So the 4th one, they will now come in to start paying. And what they pay is co-pay. You're going to bring their own, bring your own. So it's good we know all those things. We don't have to prepare ourselves. That those things we hope that will save us may necessarily not save us. So we can make extra plan that can save us. So there is a 5-month waiting period. Benefit begins after the eligible individual has been disabled for 5 months. Please remember this for exam. So benefit begins to accrue in the 6th month and are paid after the end of that month. So you will equally start receiving your benefit from the 6th month. You have waiting period of 5 months. You start receiving your money from the 6th month. However, it can be, end of that month, which is the end of 6th month. Sometimes it can be starting of the 6th month, you start receiving. First week of the 6th month, you have sometimes 2 weeks, but highest at least by the end of the 6th month. So a worker, let's assume a worker is disabled at the beginning of March. This may be a scenario question that you should know. A worker is disabled at the beginning of March. A worker disabled at the beginning of March would complete their waiting period at the end of July. So somebody is disabled by March. That person is not collecting anything. That person have a waiting period that will end of July. End of July. And the person will start receiving his first check in August. Oh, God,
say that again, please.
So what we are saying here, remember, we have 5 months waiting period. You start receiving the benefit from the 6th month. Now, let's demonstrate it this way. A worker is disabled at the beginning of March and will complete 5 month waiting period at the end of July. That's 5 months. Now, he or she will start receiving his first check in August. Is that clear?
Man, yeah.
So what I'm trying to let you know here, in case scenario questions will come in that way, just know that waiting period for disability benefit is 5 months. In fact, if a scenario question comes, you do not know that 5 months is a waiting period, there is no way you're going to pass it. No way. And that way you say it's calculation. It's never calculation. It's just you trying to understand the content. If you understand it, you will pass it. It's just a question of doing subtraction to know when the person will start receiving his paycheck. The check, benefit check or benefits, disability benefits start coming at the 6th month. Okay. If somebody is disabled by March, his waiting period, which is 5 months, will end at end of July, which is 5 months. Then you are expected to start receiving your first check by August. Of course, that's the truth.
But so you could apply, and it's up to them. It's up to them after they interview you.
Maria, you said that one. I just say it.
All right, done.
So what the only thing we need to know, we have to know what we hope for. Remember, at the beginning, we understood that Social Security should not be only way for you to retire. You should have other ways to support Social Security. That's what they're trying to let you know. So if you are disabled, this 5 months to receiving benefit from the 6th month, we tell you that you still have to make some other arrangements.
Mm-hmm.
So the other arrangement is what we are telling you guys now. What is the other arrangement? You can, under this Social Security, you can still add annuity. You can still add a wonderful good life insurance policy that will help you to achieve the goal of a good retirement from when you retire from your job. So that's what that's what they're trying to tell you. So if for those who are only understood Social Security, if you talk to them, so, oh, I'm mad, I have Social Security to take, tell them that it cannot help. It may not be enough. Mm-hmm. Yes, that's the truth. The book said it's not going to be enough. They said it here. It's not enough. It's just something to add to your retirement plan. It's just a little bit thing to add. So let's look at definition of disability by Social Security. Under Social Security, disability means an employee cannot engage in any occupation due to a condition that either is expected to result in death or will last continuously for at least 12 months. That is disability for Social Security. So if it does not have these two options, then it's not disability. It's a condition that person cannot be able to do any. Remember this word. I want everybody to pay attention to this word. Engage in any occupation due to what? A condition that either may result to death or will last continuously for at least 12 months. That is when you can qualify to file for Social Security disability benefit. So the impairment must be severe enough to prevent the individual from performing any substantial gainful work available in the national economy, regardless of local job availability. So all this is what we should know. So if you know it, so that you will not be planning, oh, I have a social security, or I have 401k, that these things are not enough. For you to retire stressfully, for you to retire not to go to nursing home, then Social Security and Medicare is not enough for you. And even the so-called 401k is not enough for you. That is the basic truth. You must have life insurance, good life insurance policy. You must have long-term care, or you must have annuity. All those things put together will make you richer when you retire than when you are still working. So I think everybody's plan should be even to be richer when you are old. Because who doesn't want to stay in his home till when God calls him or her? Than to go to nursing home. Even the smell alone at nursing home will make you sick. Our prayer is not to go there, honestly. So remember, the minimum requirement for workers under age 24 to obtain currently insured status is 6 credits in the last 3 years. So people who are under 24 years. So the earlier you start putting your children into payroll, the better for you. So by 24 years, they must have worked 6 credits, which means they must have worked 3 years. So there's benefit of your children start getting their paycheck from you from 16 years. For those of us who are still filing tax using their child who is 18, 19 to file tax, you are not only cheating the child, you are reducing him from doing that. So you should expect that from 16, 17 years, your child must have started filing tax by himself. Yeah, there's a lot of benefits based on that. There's a lot of benefits based on that. So your target will be, by the time your child is still under 24 years, he must have done what? At least worked 3 years. 6, which means she or he must have a 6 credit, which is almost 3 years, working for 3 years. Then if you do that, they will say that this person is currently insured in Social Security. So please, let's follow that. So these are the key things we should know here. Fully insured, must have 20 or 40 quarters immunity before disability. This is what qualifies you before you get a disability. 5-month waiting period, must be totally disabled and not partial, disability must last at least 12 months or result in death. So that's the definition of disability in Social Security. This is what we just said now. Social Security death and survival benefits. When the person dies, who is there to get the money? I mean, who is there to get the benefits? Is it the husband or the wife, or is it the children? Who is the beneficiary? But remember, you cannot get 2 of them at the same time. If you are the beneficiary of your husband and your husband is your own beneficiary, if anything happens in any of you, the other person is not going to go and collect the husband own and collect her own. You must collect one and leave the rest. Of course, you know where the rest will go. So Social Security survivors benefit.
Sir, just one question. So in a situation whereby, let's assume the eldest child is the benefactor and the mom is getting Social Security, they can still withdraw the father's own and she still have her own.
Of course. If the child is the beneficiary, then the child is the beneficiary. What happens if anything happens to the son or to the mother or the father, and the children are beneficiary, the mother or the father who is still alive will still collect his own or her own.
And you can use more than one benefactor, right?
Of course, it can be more than one.
Okay, thank you.
Beneficiary can be more than, can be as 2 or 3 or any. In fact, the only thing is that all of them have to share that 100%. So if you like bring out the whole community, they have to share that 100%, even
Okay.
0.1% to each one.
Yeah.
Yeah. So social
Okay.
security of survival benefit or death benefit consists of 2 parts: one-time lump sum death benefit, and in qualifying cases, monthly income benefit payment to survivors of disease covered workers. So survivors can receive it monthly. I think mostly everyone receives monthly. Nobody wants to get lump sum. Don't think anybody has asked for lump sum in social security, even in life insurance. Even in life insurance, people try to avoid lump sum money. You know, even people who won lottery equally try to avoid lump sum money because of the tax implication. And again, the insurance company will tell you that, look, if you get this money, they want to help you to manage the money. They won't want you to get you a lump sum, big lump sum money at the same time. They may want you to transfer it to annuity where you'll be paying you the interest. There's a lot of ways they can manage the money for you. Even those who won lottery too, if you say want to collect it lump sum, the tax implication will be more that you cannot, in fact, you lose half of the money. So in qualifying cases, monthly income payment is always the one people like to choose. So to qualify for full benefit, a worker must fully insured. Of course, full benefit, when you are getting 100% of the money, that is full benefit. So for limited benefit, a worker must currently insured. Currently insured means that you have earned at least 6 credits in the 13 quarters before that, which means you have, that's why they said when you charge up to 4 years, it's before 24 years, your child is supposed to have met 6 credits. That's the truth. Which even before the child come out of college, supposed to have met close to that 6 credits. That's how it's, that's ideally, that's how it's supposed to be. There are people, some of us will continue to use their child to do fight tax until, you know, it's not easy. At least the child has to work for him to pay tax by himself. So also it should be noted that the family maximum benefit limit may reduce the individual payment when multiple beneficiaries are receiving benefit on the same worker's record. So ask the question, you can see when individually a lot of people are collecting the money, it may reduce the individual payments. Of course, if you give it to one person, it'll be more, but when a lot of people are receiving it, you're going to share that more to a lot of people. So the lump sum death benefit. The lump sum death benefit of $255 is paid only to surviving spouse who was living with the disease at the time of death. A surviving spouse or child who is eligible for monthly benefit based on disease record. So do not go and ask for what? Lump sum payment. If you ask for lump sum payment, you will pay only $255. I hope everybody sees that. If you go and ask for lump sum payment, you're going to pay $255 only.
Why so cheap?
It's not cheap. You see, let me tell you, have you forgotten how Social Security have been collected, funded, and how it's being shared? That's why sometimes you can see that it's not so sustainable to use. I wouldn't want to use that word. You know, in the morning we use any word we like. so if me and you is working, let me give these instances because that's what it is. What I'm gonna say now is that's what it is. Let's assume Keoma and Austin and Chinyere are 2 staff working for Clara. So Clara is their boss. Clara, 3 of them are working and Clara has retired. So Akiyoma, Austin, and Chinyere is a staff employee working so that Clara, who has retired, will be paid. So now, probably for the question of why it's so cheap, $255, Clara has retired. Now, Clara said she wants her money in lump sum. She don't want monthly payment. Remember, in monthly payment, this Akioma, Austin, and Chinyere has to work for Clara to be paid that month. Now, Clara said, no, I want to get my money. I want to get my money. The children of Clara can maybe come and say, well, I want to get my dad money, my mom money. I want to get it at lump sum. The government will pay them $255. But if you decide to be receiving monthly, you'll be receiving what is due to that person who has retired. Whether the person is alive or dead, you will be receiving what is due. But if you want to go and get it lump sum, means that these three people who are the employee now, who are working to pay this Clara, what happened is that the money has gone, the money cannot be able to pay lump sum. And lump sum will be huge money. Did you get it now?
Yes.
So that's why most times you see people arguing about social. In fact, if you listen to any people debating about social security, you see that it's not sustainable. That's the truth. It's not sustainable. So that's what you should know. So in addition to lump sum death benefits, Social Security provides eligible survivor with a monthly income based on the disease workers PIA, which is monthly paid in amount insurance. So this is what you should know. So therefore, what is telling you that you should not go for lump sum? One, you're going to lose a lot when you go to lump sum. So the survivor benefit, the benefit amount vary by beneficiary type. Surviving spouse, a surviving spouse can begin receiving reduced benefit as early as age 60. As early as age 60, a surviving spouse can still begin to receive that. So the employment benefit provision applied. Benefits are reduced if taken before full retirement age 67, for those born on 1960 or later. So age 67 is the age when you start to receive your Social Security. If you now start receiving on age 60, remember how many percentage reduction? Let me see whether everybody's following. If you start receiving as age 60, how many percentage reduction you get from your Social Security?
30.
30%. 30%. Your money, 30% gone. So is there any need to start receiving from 60 years? So it's food. Remember, please. I don't know how to say it. We are not in the morning. We were so vulgar. We said everything we like. All right. So let's go to maximum family benefit. There is limitation when several family members are eligible for Social Security benefits. Similar to PIA, Social Security established what? A maximum family benefit for every level of average earnings. Let's look at survival benefit blackout period. You can write blackout period. We're going to describe what blackout period is. I think some example, we have seen it several places where they want you to know, they ask questions about blackout period. So the Social Security blackout period describes that period following an insured death during which a surviving spouse is ineligible for survival benefits. That's what we call the blackout period. If somebody's spouse dies, that period that person is ineligible to collect benefit, so that person's benefit, that is a survival benefit, is what we call the blackout period. So during that blackout period, the only thing that can happen is this. If the spouse, that person who is surviving the person who died, is having a small child, caring for a minor children, that's when they will pay you money during that blackout period. If you have a small children, minor, you are taken care of, then they will consider you to pay you the amount, pay you the money monthly during the blackout period. If not, the blackout period is that period that if the spouse dies, the surviving spouse are ineligible to collect survival benefits, which is Social Security benefits. So the only thing that happens is that if that spouse has minor children, then he or she will be given the benefits. Is that clear? So spousal benefit during the dependency period and when the youngest child turns 16 years of age. So that blackout period can enter into dependency period only when the youngest child turns 16 years of age. The blackout period begins at this time and ends when a surviving spouse reaches at least 60 years of age and can apply for their own monthly survival benefits. So, in other words, anything start taking your money from 60 years is you are just cutting your money into two and taking half. Because if you're supposed to pay 100%, you are giving 70%. How many remain? How many remain? So for some of us, some of our brothers and sisters who work and they say they are so proud, oh, I've started receiving my social security. Tell them that it's not the best thing. They are losing part of the money. Half of the money being lost. Please. So we're not gonna go through all this scenario. All right. We're almost done. We are done with this chapter. So all these are summary of what we just said about Social Security. Anybody, any question on Social Security? Any question before we go to the, we're not going to go through the summary. This is all that we discussed. So that's Social Security for you. So you have to know that you cannot live a good retirement when you only base your retirement on Social Security. Add some other things to it. And for some of our sisters, brothers, that will be so proud to tell you that, look, I've started collecting my Social Security when they have not reached age of 67. Tell them that they are what? Cheating themselves. They are losing bulk of the money. Yeah. But the age they can start receiving Social Security is from 67 years. Yep. All right, we have this summary chapter. Let's listen to it. We can go to chapter 14 now, but let's listen to this and do the chapter exam before we move forward. Listen to this.
Congratulations on completing the Social Security chapter. You've just explored how this vital program supports American workers and families. Let's review the essentials and reinforce your understanding. We began by examining the purpose and characteristics of Social Security. It's designed to provide basic protection against financial challenges from death, disability, and aging. But remember, it's a supplement, not a replacement for personal financial planning. Next, we covered how Social Security is funded. The program receives financial support primarily through payroll taxes, which are shared by employers, employees, and self-employed individuals. These contributions are collected under the Federal Insurance Contributions Act, commonly known as FICA. For employees, the tax is split between the employer and the employee. But for those who are self-employed, the full amount, both the employer and employee portions, is paid through the self-employment tax. These contributions help fund Social Security benefits for retirees, individuals with disabilities, and surviving family members, ensuring the program remains a vital safety net for millions of Americans. Understanding eligibility for Social Security benefits is essential, and it all comes down to work history. There are two key statuses to know: fully insured and currently insured. To be fully insured, a person needs to have earned 40 quarters of coverage. That's roughly 10 years of work. Reaching this milestone unlocks access to the full range of Social Security benefits: retirement, disability, and survivor support. On the other hand, currently insured status is more limited. It means the person has earned at least 6 quarters of coverage in the last 13 quarters, about 3 years. This status doesn't qualify someone for retirement or disability benefits, but it does allow for certain survivor benefits, like payments to a spouse or children if the primary breadwinner passes away. In short, these eligibility categories help determine who gets what and when based on how long they've contributed to the system. Social Security benefits aren't random. They're calculated using your highest 35 years of earnings, adjusted for inflation. This ensures your benefit reflects your long-term income, not just recent paychecks. At the heart of this calculation is something called the primary insurance amount, or PIA. It's the baseline used to determine how much you'll receive in retirement, disability, or survivor benefits. But timing matters, especially when it comes to retirement benefits. If you claim benefits early, before your full retirement age, your monthly amount is reduced. Wait longer and your benefits increase. It's a trade-off between getting support sooner or maximizing your monthly payout. Disability benefits require you to be fully insured, which means you must have worked and paid into Social Security for a sufficient number of years, typically with recent work in the years leading up to your disability. There's also a 5-month waiting period before payments begin, so benefits don't start immediately after becoming disabled. This structure ensures that support is provided to individuals with a substantial work history who are unable to continue working due to a qualifying medical condition. The definition of disability is strict. You must be unable to perform any substantial gainful work due to a condition expected to last at least 12 months or result in death. Survivor benefits include a $255 lump sum death benefit and monthly payments to eligible family members. Spouses, children, and dependent parents may qualify, but benefit amounts and eligibility vary. Watch out for the blackout period. After the youngest child turns 16, a surviving spouse may not receive benefits until reaching age 60. Children's benefits continue until age 18 or 19 if still in high school. Remember, Social Security works best when combined with personal savings, investments, and insurance. Timing your benefit claims and understanding eligibility can make a big difference in your financial future. Consistency builds progress. After each study session, take a moment to reset, then dive into the next. You've got this.
All right. So there's something he said that has so much interest me. Social Security work best when you add social things, add other retirement plans to it. So please let us not base our retirement only on Social Security. That's what we're trying to let us know. All right. So let's go to the exam section of it. Sorry. So let's go to exam section of it, which is chapter 12. Of course, we're going to start chapter 13 today, which is health chapter. Chapter 13 is health chapter, which is health and accident insurance. This is another big chapter that we're going to look at. So let's first of all do the question. The question is about seven of them. It's not much. All right. 12 questions on Social Security. So let's answer them. Remember, use elimination methods. 7 questions, sorry. Use elimination methods to answer them. It's always, if you have any points, you can jot it down to remember when you are doing a review for the exam, your personal review. So one of the questions said, to be eligible for Social Security disability benefit, an employee must be unable to perform what? Must be unable to perform what?
Any equation?
Mm-hmm.
Oh,
A.
Right. Anybody, someone
A
say
as
A.
an app. A.
2 people say A. So it must not be able to perform any occupation, of course. Any occupation. So what is old age and survival health insurance, also known as what?
A.
A.
A as an apple.
All right. So for anybody who doesn't know what Social Security means, Social Security is known as, before now, is known as Old Age Survival and Disability Insurance Program. It's not Social Security. It was known as what? Old Age Survival and Disability Insurance. That's Social Security we are called today. And it was signed into law in 1953 by President Roosevelt as part of the Social Security Act. So President Roosevelt started the issue of Social Security at 1935. All right. So which of the following does Social Security not provide benefit for? Which of these cannot get benefits from Social Security?
C. C as SIM card.
Any other person? 2 persons say A. All right. We're gonna follow the majority.
C.
No,
Yes.
C.
All right. For those who say A, survivorship get benefit.
Of course.
Retirement get benefit.
Yeah,
Disability get benefit.
get benefit.
The only one that doesn't get benefit. Which we
Member
don't mention dismemberment. No,
following.
no.
Survivorship will be the blackout, right?
No, survivorship would be like your beneficiary.
Oh, okay.
Yeah, the survivorship is the beneficiary.
Okay, thank you.
So this one said one become eligible for Social Security disability benefit after having been disabled for how many months?
5 months.
Well,
12.
no. One becomes
6
eligible.
months. 6
Five.
months.
5
Five.
months.
5.
6 months.
Yeah, 5.
Five.
Then it start on the 6th month.
Yeah,
Five.
remember the waiting period?
Oh, 5. Mm-hmm.
Yes, what is asking you is the waiting period. So one become eligible for Social Security disability benefit after having been disabled for 5 months. The benefits start coming in the 6th month. That's the example they showed, or they said somebody started have disability by March, then the waiting period will complete by July. So by August, the first check will come in, which is the benefit. The benefits start from the 6th month. So that person have to be 5 good disabled before benefits start, and that 5 months waiting is called the waiting period. So the amount of monthly disability benefit payable under Social Security is affected by which of the following factors? Which factor affects Social Security benefit payments?
B as in cat.
Any other person?
Amount of the benefit.
I say C2.
All right. So let's analyze it this way.
Oh
Let's analyze it this way.
From the other
Amount of benefit available from other sources. Nature of disability and insured tax bracket. Insured educational level. He said the amount of monthly disability benefit payable under Social Security is affected by which of the following factors? The amount of the benefit available from the other sources. How much did you put in? The amount you put in is the amount you have. Your tax bracket is nothing to do with your Social Security payment. How many percentage are you paying to your Social Security? 7.65%. 7.65% from your paycheck. They tax you 7.65% before what?
Before the money is given to you.
Remember, there's something I want to point to you, everybody here. If you carry your paycheck and look at it, the fiscal tax is quite different from your tax. I hope everybody knows that.
So basically, the disability is different from the disability on Social Security is different from the when you reach the 67, the maturity age, when you get no deduction coming out, and as you go 67 up to 70, that's not the same thing, correct?
No, disability is like something like if an insurance, life insurance, we say is a rider. Let's use, but it's not a rider. Like everybody can qualify for disability. If you have Social Security, you can qualify for disability. But they have given you the condition that can qualify you to regard it as being disabled.
For every month.
Yes.
They
So
can-
the person must have been disabled for at least 5 months, and that disability can last for 1 year and may equally lead to death. So that's the definition of disability. But I want to point out something to you people because of tax brackets. Somebody talked about tax bracket C. Almost 2 or 3 people choose C. Then remember, the 7.65% you are collecting is what? Is your contribution to your insurance. It's a premium. So this is money you are putting aside. It's a premium. You are putting it aside. That is not to say you are not going to pay your tax to government. I don't know whether everybody understood that. So that is when you now talk of tax bracket. The tax you're going to pay to government now will be based on your tax bracket. Is everybody getting it?
No, I get this.
You didn't get it? So tax bracket is applied to your level of income annually.
Tax bracket? What
Yes.
that mean?
I've talked about tax brackets every time. Let me show you people. We're gonna let's
No, keep explaining.
right. So no, I want to share. All right, before we finish, I'm gonna show people what tax bracket is and where you belong. All right, I don't even need to show it. I can say it here. So everybody belongs to a particular tax bracket. Everybody belongs to a particular tax bracket. For instance, if you are making 11,000 to 15,000, all right, if you are single, you're making 11,000, and you're married, you're making 15,700. The tax bracket is 10%. That's the tax you pay to federal government, federal income tax. So don't be deceived by the 7.65% you are seeing. Those ones are the money you are contributing to your social security and your Medicare. Is the insurance you enrolled into, which they made it mandatory that if you're working, you must enroll in that insurance. So that's why they go directly to your paycheck to get that money to pay in for your insurance, which is Social Security and Medicare. Then have you paid tax to government? No. The tax you're going to pay to government is now based on the tax bracket where you fall into. So if you are living singly, you're a single person, and you're getting below 11,000, your tax bracket is 10% of that 11,000. That's what you pay to government. Now, if you are married, household, and you guys are making $0 to $0 to what? 15,700. Your tax bracket is equally 10%. Then if you're making up to 44% as a single person, 44,000 as a single person, your tax bracket is what? 12%. For a household, you guys are making, the husband and wife is making 59,800 annually. Your tax bracket is 12%. Now, if you are single, you are making 44,000 to 95,000 annually. Your tax bracket is 22%. Then if you are double, maybe you husband and wife, you guys are making between 59,000 to 95,000 annually, then you guys tax bracket with 22%. Then if you are single, you're making between 95,000 to 182,000, your tax bracket is 24%. Then if you are double, you and your wife making 95,000 to $182,000 annually, the tax bracket is 24%. So that is the income tax you're going to pay to government, which is the one you are filing tax. So the 7.65% you are paying for the Medicare and Social Security is not your income tax, please. Everybody should know that. I hope it's clear.
Sir, quick question. So the answer was, can you go back one? It says, does it mean that if the person is paying, if the person is receiving annuity, they will look into the annuity and it will affect the amount of Social Security the person will be collecting?
No. Yeah, it doesn't. Nobody has any right to go. No, the government don't go to annuity. Annuity is a private arrangement. Life insurance is a private arrangement. Not everybody has it.
Okay.
So the government does not go to your Social Security. Doesn't go to your annuity, doesn't go to your life insurance, and that's why they bypass probate court.
Okay.
Is that okay? They bypass probate court because they cannot go to your estate when the person passes. However, if you don't have a beneficiary and don't have the portfolio, it will go to probate court. It will go to your estate. Yeah. All right. Any other question before we move to chapter 13? Any question based on what we just said? Any question on Social Security? Social Security is not always it's not a difficult topic, and I think much question normally does not come from there. So we have to. I hope everybody here have one way or another registered for the exam. That's my point, so that we know that all of us are in the same boat. All right.
I have a question.
Go ahead.
I'm scheduled for Thursday. but I'm not quite good on annuity.
All
And
right. You have test when?
Thursday.
Thursday is today is Monday.
Yeah.
All right. We cannot do annuity for you on. Do you normally come on morning time or evening time?
Evenings.
All right. We can take probably we can review annuity tomorrow for you since you're going for exam. Tomorrow is Tuesday.
Yes, sir.
Tuesday or Wednesday, which day of the
Uh,
Wednesday, we can do it tomorrow. Tuesday, Wednesday, we know that. This week we are busy.
okay.
Yeah, so we can do it tomorrow. Wednesday, people have started arriving. In fact, people started coming to Dallas today. So
Oh, nice. Okay.
for the event weekend. So we're going to do it. We're going to do it tomorrow in the evening time. We're going to just go through our annuity for your sake to be able for you to pass.
Thank
So
you so much, sir.
I hope you are coming to Dallas.
Oh, yes, I'm in. Yes,
All
sir.
right. So we're gonna do it tomorrow in the evening. That's what we do first thing in the evening tomorrow. So that will prepare you for the exam on Thursday.
Thank you. And it's the same time, correct? 7.
Yeah, it should be
time.
6 p.m., which is 7 your time, 6 p.m.
Yes.
Central.
Thank you, sir.
All right. So let's go to Life and Health chapter. Chapter 13 is what? Health and accident insurance. So since then, we have been talking about remember we talk about insurance. We leave insurance, we enter into annuity, which we talk about investment. Is a combination of insurance and investment. Now we're going to leave them totally. We are going to go to another part of insurance called the health and accident insurance. That's another big topic. And in your work, they are the bet or what will I call it? That when you want to catch fish in the river, you have to put some things on the hook. So what's those things you put on the hook to attract the fish? What is it called?
Bait.
Huh?
Bait.
The
Bait.
bait. All right, good. So
The worms.
whether worm or anything is they called bait. So
Oh.
health and health insurance and group life insurance are the bets our employers are using to attract us to their company. I hope everybody knows that. Because everybody's going for anywhere you get health insurance, anybody's going to everywhere you get group life insurance. However, group life insurance is when you go and buy term insurance. If group life insurance is not contributory, you better go and buy individual term insurance and reserve your money. If it's not contributory. Anyway, that should be your own idea, your own understanding. Do whatever you feel good. But what I'm saying in essence is this: group life insurance is ordinary term insurance. The only thing I can see from it by the little experience I have as being retired is when you retire, you can convert it from term to whole life with cash value. Yes. However, can you convert your term life insurance to whole life insurance? Of course, using 1035. You can do that. But the only thing is this. Most insurance companies will say after 5 years, you can no longer, after you buy term life insurance, level term, after 5 years, you can no longer convert. Some will say after 10 years, some will say after 3 years. The one I bought when I don't know nothing, they said it's 3 years. So when I now get the idea of what is going on, I call them to convert. They say, no, I can no longer convert. I should only convert within the first 3 years. Some companies give you first 5 years. Some say first 10 years. So if not, that group life insurance you have at your job, you can as well buy term life insurance because, of course, the one you have at job have restrictions in terms of where you die and where the person did not die. But the individual term insurance you buy is actually wherever it occurs. Death is death. But this one in your group workplace means that if you die outside job, it may not apply. So it depends on when the person died. And the only thing you get out of it is that when person dies. So some people call it death insurance. Of course, I think when they say that, it may not be wrong because the only benefit thereof you get from it is when the person died, which means it belongs to the beneficiary. And you ask yourself, how many times have you paid out? of course, uncountable time he has not paid that because of the disadvantages involved in it. If you miss payments, what happened? After grace period, what happened? Their policy terminates. If your policy terminates, you do not recover 10 cents out of it, except you have return of premium rider. So there's a lot of things involved with group life insurance how I work. So, but today we're going to look at another bet, which we call the health insurance. The health insurance is the one you get from your job. The health insurance, you can also have individual health insurance. But however, the one you have their job is more cheap as compared to the one we get individually. So when we're talking about health insurance, health and accident insurance, we are not talking about life insurance. It's two different things altogether. Life insurance, we have dealt with it. We still come into it after this chapter. So this is about health insurance you get from your job. So here, you're going to see different terminologies, different names, different terms that you need to know that will help you to know exactly what it is. The chapter is so big, but we're going to try to do as much as we can. Since tomorrow morning, we're going to do annuity in the morning for the sake of somebody who's going for exam. So let's begin with, this scenario is actually what we're going to see. Imagine waking up with severe abdominal pain that requires immediate medical attention, or spraining your ankle during weekend hike without proper insurance coverage. This unexpected event could lead to significant financial strain. Health and accident insurance serve as your financial safety net when unpredictable health challenges arises. So these are the aspects that life insurance cannot do. But can life insurance come up to do this? Of course. But it will do when it becomes chronic, critical, or terminal. But if not, health insurance will take care of it. When you go to your doctor, what take care of you? Health insurance. Can life insurance take care of it? No. So which means for you to exist well here in America, you must have life insurance, which is your maximum protection. You must have your health insurance for your health. Then you must have annuity for your retirement. Of course, you must have to have Social Security, and you must have to your 401k to say. And you must have other investments. So if you have all those things put together, you'll be richer when you retire than when you're working. That's the simple truth. And it's good to be richer when you are retired, so you can live a good life. And of course, when the person passes, you'll not be a burden to anybody. So remember, children nowadays do not like to tolerate burden. That's why in every small thing, they will carry you and put you at the nursing home, say that, Mom, we don't have time, we go to work. And you justify it because it's true. They don't have time. So in this chapter, we will explore what the diverse world of health and accident insurance, a field that encompasses far more than just medical expense coverage. You will discover, however, these policies protect individuals from the economic impact of illness and injury through various coverage types, from disability income to dental care. So somebody was asking about dental something. We're going to see it in this chapter. So whether you are new to insurance concept or building an existing knowledge, understanding, the fundamental health and accident insurance is essential for anyone preparing to a career in insurance. So while you are writing this exam, you can see most of us are writing health and life and health. It means you can write policy in life and you can write policy in health. So the policies we examine represents crucial financial tools that help people maintain their quality of life when facing health challenges. As we navigate through different policy types, coverage structures, and what limitation, we gain knowledge needed to recognize how these insurance products address specific clients' needs and circumstances. So these are the things we are going to see. We're going to talk about perils, losses, and of course, health insurance policy types and dental insurance. We're going to learn all of them in this particular. So let's watch this video. It's about 2 minutes, 44 seconds, then before we continue.
Welcome. In this chapter, we'll explore how health and accident insurance acts as your financial safety net when life's unpredictable health challenges arise. Imagine waking up with severe pain or getting injured on a weekend hike. Without insurance, these events could lead to significant financial strain. Health and accident insurance protects against these unexpected costs. This chapter introduces health and accident insurance, outlining the types of perils and losses it covers. It also examines the various classes of health insurance, with a focused look at limited policy types and dental coverage. By the end of this chapter, you'll be able to distinguish between key perils, accidents, and sickness, identify 5 major types of losses: medical expenses, disability, dental, accidental injury, and long-term care, compare individual versus group health insurance contracts, differentiate private insurance from government programs, explain comprehensive versus limited policies, categorize limited insurance policies and their purposes, and describe dental insurance structure, coverage levels, and specialties. Let's start with the basics. Health and accident insurance covers 2 main perils: accidents, external events, and sickness, internal conditions. The risk of these events is called morbidity. There are 5 major categories of losses: medical expenses, disability income, dental expenses, accidental injury, and long-term care. Each type of policy addresses specific needs. Health insurance can be classified by who is covered, such as individual or group, by who provides the coverage, including private insurers or government programs, and by the extent of coverage, which may be comprehensive or limited. Comprehensive policies cover a broad range of losses, while limited policies focus on specific risks like accident only, specified disease, or hospital indemnity. Dental insurance is a specialized form of health coverage, focusing on preventive and diagnostic care as well as some treatments. You'll learn about standalone, integrated, and combination plans, plus dental specialties like orthodontics and oral surgery. As you study, remember, health and accident insurance is designed to protect people from financial hardship when facing health challenges. Understanding these products will help you serve future clients and pass your exam with confidence.
All right, so let's look at these terminologies that guide us to know more about this type of insurance. Of course, it's called health insurance, health and accident insurance. We have dealt with life insurance. Now we are talking about health and accident insurance, the one that takes care of our health directly. So, accidental bodily injury or accidental results. By the addition of these 2 words, accidental and bodily injury, that will tell you what it means. So most times, you see some of these terms, you don't know them. Just combine the word together. Combine 1 or 2 words of them together, that will give you the meaning. You know individual what accidental mean, bodily, you know what I mean, and injury. That will tell you what accidental bodily injury means. It's another way to say accidental result. What does it do? Is an action result, and if an action results in an injury, the injury must be unexpected and unintended for any claim to be covered, even if the act that caused the injury was intended, even though the result was not. So, accidental result. Accident is unexpected, unintended, not planned. It's not something that planned. It's unintended and unexpected event that happens that causes injury. That is accidentally. If the injury it causes if it is in the body, it's called accidental bodily injury. So accidental means is something that happened, unforeseen, unexpected event, and unintended event that result to loss or harm. Loss can be that your body it causes a bodily injury. That is a loss. Harm can be that it causes bodily injury. So, accidental capital sum. When you are paying, we will meet. I don't think we met accidental death and dismemberment policy. We met it previously when we talked about it before this chapter. So if you have AD&D, it's a policy, type of policy. If you have AD&D, That is accidental death and dismemberment policy. That's what this means. AD&D is accidental death and dismemberment policy. If you have it, this policy, and probably the person had accident, then that accident may not be total. It may just a small, somehow fatal, but not all that damage, all that serious. So the benefit you get from that part of accident is called capital sum. From the principal sum, they pay you capital sum, which is just like payment amount for an accident. So the capital sum is the amount payable, lump sum for accidental loss or sight or accidental dismemberment under a term of a accidental death and dismemberment policy. It's just pay you that amount. Now, when you get all, maybe it's so serious and so damaging, they pay you what they called principal sum. So we're going to see capital sum and principal sum. That is the two terms you have to know what it means. So decreasing term disability insurance. All right, I want everybody to go back to when we did life insurance. How many types of life insurance do we have? Who can remember? How many types of term life insurance do we have?
3.
3. What are they?
Decreasing, increasing, and level.
Good. These are the 3 types of life insurance, term life insurance we have. Increasing, decreasing, and level. And the most important one that people goes for term life insurance is level. That's the most prominent one that people goes for. Most people do not care about decreasing term. Most people do not care about increasing term. So now we know that decreasing term in term life insurance means that this kind of insurance can be used to pay for your mortgage. Let's have that in mind. Now, bring it out, put it in disability. Put it in disability. So decreasing term in life insurance as a type of term life insurance is also the same thing in terms of disability life insurance. But this one will be when it involves disability. So in the disability market, this type of insurance is described as disability credit insurance. Remember, we say credit insurance is used for payment of loan. Then disability decreasing term insurance is used for payment of mortgage.
Mortgage.
Yeah. So these two things connected together. See, they almost telling you the same thing. Mortgage is loan. Now, specifically, decreasing goes for principal or mortgage payment. That's why it refers as it can use for pay mortgage. So in the exam, you may see a question that asks you what type of life insurance can be used in payment of mortgage. It's decreasing term life insurance. So decreasing term life insurance is term insurance or decreasing disability insurance. In the disability market, what happened? This type of insurance is described as disability credit insurance. The contract end date is fixed. The event of disability, of course, is known. The policy pays the monthly premium due. The insurer exposure decreases as the total amount due to the creditor decreases with each loan payment. Remember, in your mortgage payment, as you continue to pay your mortgage, what happened? The principal decreases. As you continue to pay your mortgage, the principal decreases. So until when you pay off the mortgage, that's when you pay off the principal. However, we don't want to dump into that. Remember, in your mortgage, they use compounding to do your mortgage calculation. That is why you buy mortgage 300. By the time you pay it off, you're paying close to 700,000. Because they're using compounding to calculate your mortgage interest. Remember, there's 2 ways you can do interest. Simple interest and compound interest. Who remember that in secondary school? So now that you're here, all your loans, your student loan, your credit card loan, your mortgage loan, all of them are calculated. The interest you are paid is based on disability. I mean, it's based on compound interest, sorry. So we're gonna at any time when we're gonna talk of based on when you buy a mortgage. I'm a realtor. When you buy a mortgage, the principle of removing your insurance, your taxes from the escrow account and putting it separate will help you save some money. A lot. A lot. You see how your mortgage will come down like fly, we just drop like football. All right. So we are not there now. So decreasing term disability insurance is the disability market. In the disability market, this type of insurance is described as what? Disability credit insurance. The contract end date is fixed. And in the event of disability, what happens? The policy pays the monthly premium. In the end, let's assume you have decreasing disability insurance. So if there is any disability that occurs, the policy pays the monthly premium. Of course, they will continue to pay you the monthly premium until, and the principal continue to decrease until what happened? The payout finishes. So that's decreasing disability insurance. Then let's look at elimination period. Remember, if I'm you, I write down elimination period and I write what it means. We have had a lot of periods. So you can write down elimination period. That will help you to remember what it is. Generally, when you are doing your personal review for your exam. So what is elimination period? And is in health insurance, elimination period is the waiting period that starts at the beginning of covered disability or long-term care claim. You file a claim, there's this waiting period. There's this period you're going to wait until the benefit begins. So that period you wait until the benefit begins is what we call elimination period. So benefit begins after the elimination period ends. If you have disability today, or if somebody is sick, let me use the word general sickness. If some person is sick today, and the person decides to file claim. If you file claim, from the period you wait to file the claim till when payment starts is what we call elimination period. So those periods you are waiting, are they going to pay you? No. You're going to start from the day they want to start. That's when they're going to start. So this period you are waiting, they're not going to pay for it. So that's what we call elimination period. So it applies in disability. When somebody becomes disabled, the period he wait before disability benefits start coming is what we call elimination period. So write it down. It will help you to differentiate them. So this is a waiting period that starts at the beginning of covered disability or long-term care claim. Benefit begins after the elimination period ends. So this period functions similarly to a deductible expressed in time rather than in money. So orthodontics, of course, everybody knows what orthodontics do. There are the people that do bracing and they treat canals, treat diseases that affect tooth pops. Everybody knows what orthodontics is. Formulary is what? A list of specific medication covered by prescription drug plan. Sometimes formularies are not covered by insurance. So some of them you personally buy them. It's a special medication, specific medication covered by prescription drug. It may cover by prescription drug, but most times, for those I've seen, it does not cover some insurance does not cover them. It's personal medication. If you go to hospital, most of them come to hospital with it for some formulary medication. They come home with it. So in that case, that medication is theirs. The hospital may not provide it for them. So morbidity. Morbidity is the probability or risk of becoming ill or disabled. That's morbidity. Of course, it's simple for everyone to know. Oral surgery. Of course, when you have tooth extraction, that's oral surgery. Orthodontics is what? Dental specialty, correct teeth alignment with devices such as braces and retainers. Periodontics is a dental specialty focused on diagnosis, treatment, and prevention of gum disease. That's periodontics.
Do we need to know all this?
Of course, you don't need to know them, but of course, without saying them, you know what they mean now.
Okay.
You know all what it means. Like normally, everyone know what orthodontics mean. Nobody, they might not ask you these questions. Shut. Nobody's gonna tell you to define this, but it's just what we are going to see as we go into the content. So while we first reviewing them, so that you can know them. So when you see it on the content, it will not be a new word to you. So let's look at the most important one. Of course, is not what prosthodontics is. The most important one is principal sum. This is the death benefit payable under arms of the AD&D. That is principal benefit. Remember, we talk of the capital sum. This is the principal sum. The capital sum is paid when you have a small injury. The principal sum is paid when you have a serious injury. All right. So, health and accident insurance review, overview. This is partly what we listen to the video. So the term insurance, what the term health insurance bring into focus a variety of insurance types. It was designed to protect insured against various risks. Remember, we say life insurance is a risk transfer. In life insurance, you transfer risk from yourself to the insurance company, and the only thing you pay to transfer that risk is the premium you pay to them. So you have a policy, 500,000 policy, you use it to transfer your risk. The insurance company turn around and say, all right, since I'm going to hold your risk, you have to pay me premium to cover the $500,000 you pay. I mean, you buy. You purchase $500, so you're going to pay me premium of $600 every month to cover the cost of protecting you and the policy you have bought, which means you are using that premium to buy huge money. I think that's what everybody will be seeing insurance to be. Or even though we say it's not an investment, but you're using $500 you're paying monthly to buy 1 million. Some people, $500 every month buy them up to $1 million policy. So invariably, you are using $500 to buy 1 million into your family, to bring 1 million into your family in case the person dies. But however, if the person did not die because they have a rider, such as chronic, critical, and terminal illness rider, then the $1 million you buy, you are using 500,000 to buy maybe around 800,000 they pay you, because they're going to pay 90% of that amount if you have all those riders and you have that sickness. For instance, you have a terminal illness rider, you have chronic illness rider, or you have critical illness rider. And unfortunately, you have a chronic illness rider that come up, which is treatable. Then you file a claim. Because of $500 you're paying, you already bring close to $700,000 to $800,000 to your home. So use premium to buy a huge amount of money to come to yourself. That's what life insurance. And until you begin to see it that way, that's the only time you and the whole family understand what it is. That you're using money to buy money. That's basically what it is. And because it's like that, the insurance contract is called contract of adhesion, contract of unequal value. Contract of unequal value, who remember what it is? Who remember contract of unequal value?
Where
when you get hurt, they pay
Electric.
you more, you pay less for your premium.
Yeah, that's electric.
Electric.
Yeah, it's electric. It's called contract of electric. That's insurance contract. That's what it is.
You take it or you leave it.
No, that take it or leave it is contract of adhesion.
What about the first one I said? For premium and the claim, when you put it, you pay you more, then you pay less for premium.
That's electric.
Okay.
That's contract of electric. Insurance contract is contract of electric. What do you mean by contract of electric is that it's contract of unequal value. Contract of unequal value. Meaning that you are paying that $500 as a premium to a policy of $1 million. And you pay that premium for 1 month. And unfortunately, something happened. The insurance company is not going to look because you paid $500 only for that month. If your claim is justified, then we pay that $1 million. So because of that, they said insurance contract is contract of electric contract, which means contract of unequal value. Yeah, because they have taken the risk. And in the contract, they made them promise to pay benefit if loss occurs. So that contract and the promise is binding. They must do it. So that's why it's called electric contract, contract of unequal value. The contract of adhesion is contract of either you take it or leave it, which is the general term used in the insurance contract, written by one person, designed by one person, brought out to be used by one person. You do not follow to do it, to prepare the contract. So because it's contract as one-sided, it's called contract of adhesion. Either you take it or you leave it. Of course, the insurance company bring out the contract, say, I'm bringing this out, take it or leave it. I'm not going to beg you. Either you take it or you leave it. So if you leave it, you face the music. If you take it, I face the minute. You pay me the premium, I face the minute. That's all it means. So in health insurance, is equally somehow related, but not as regards to life insurance. So health insurance can be referred to as health insurance, accident and health insurance, accident and sickness insurance, or sickness insurance. That's what health insurance, health and accident insurance is. It refers to health insurance, accident and health insurance, accident and sickness insurance, or sickness insurance. That's what health and accident insurance is. So sometimes it will use the word medical insurance. You can call it medical insurance. Health and accident insurance is medical insurance. So, but medical insurance and hospital insurance are only one type of coverage. Medical insurance, hospital insurance. So in health insurance, you have medical insurance and hospital insurance. We are going to see those when we talk about Medicare and Medicaid. In Medicaid, you can see that people have in Medicare, people have type Medicare Part A, Part B, Part C, and Part D. So in that time, we're going to be able to differentiate which one is hospital, which one is medical. It'd be easy for us to differentiate HMO, PPO, and all those names. But here for health insurance, always have in mind there is medical expense insurance and hospital insurance. It's two types. Put these two of them together, it becomes health insurance. You buy some insurance, this is for health. They will that if you go to hospital, you see that when they charge you, every doctor have his own charge. If they're medical, which is the doctor bring their own charge. The lab technicians, the lab conductor, they bring their own charge. The transport section bring their own charge. So some of these are medical, some are what? Hospital. So we're going to see them, what the different classes to this chapter. So the wide variety of health and accident coverage include disability income insurance, accident-only insurance, dental expenses, long-term care and home health care, vision care, and range of limited and specialized health exposure, e.g. cancer-only policy, which most times we call them dread diseases. In life insurance, we call them dread diseases. So these are the things we're going to see. So the goal of all health and accident policy is to indemnify the insured. What is indemnification? In health and accident insurance, you'll be hearing of indemnity.
Paying.
Indemnity.
Paying off.
What it means thereof is to pay, to bring you, to reimburse you, to bring you back to the original position you are before the loss occurs. That's what indemnity is. So in health and accident insurance, they indemnify you. They try to bring you back to where you were before, the position you were before the accident occurred. Indemnity also used in car insurance. You use your car to have accident. The insurance company want to bring your car back to original position where it was. Remember, in car insurance, you do not insure yourself, you only insure the car. And that's since insuring the property. When you are selling that car, you're not selling the insurance and the car. You sell only the property and take back the insurance. The same applies to home. If you buy a home you're moving in, that home have insurance, but you are the person that had insurance on that home. If you are living with the courage, they need order to buy a new policy to cover the home. So that's in those areas you'll be hearing indemnity. Can you hear indemnity in life insurance? Of course, no. They're not the same. So given the variety of policy categories as accident and health insurance, the term indemnity can and does take on more than one technical meaning. Depending on the type of insurance being described, the term can be used in two different ways. Indemnity can be used in different ways. Indemnity plan refers to traditional contract that reimburses the policyholder for coverage expenses. Like indemnity plan. So indemnity is always talking about reimbursement. It's talking about paying you your money, bringing you back to the original position. That's exactly what indemnity is. So because sometimes in the exam, you may see this word, it becomes so confusing. The usage and what is meant in that term, in that particular sentence. So examptive, answering exam questions, pay attention to context correctly and apply technical definition. The technical definition you should apply here, I always like definition based on my own understanding, based on my own definition. That will give me a clear understanding. But if you want to cram, do not cram. This exam is not meant for you to cram. Of course, some people will read this exam and pass it within 2 days. There's what the exam review that was done on Sunday, they did it reverse section where you only do about only the questions. You know, we are going too far to begin to go this time one by one. Some other people that are doing review, they don't do it this way. They just go and do questions. Unfortunately, some people go and pass, but sometimes it becomes difficult. So the way we are doing it is now preparing you not only to pass the exam, but to prepare you for the business, honestly. Because we are taking more time to talk about the policies, to talk about things around the review. We're equally indirectly preparing you for the business ahead. So that's why we go ahead to start doing our own review this way. This is not how most people are doing their review, no. They just go and do questions and answer questions, probably explain one or two things on there, and everybody will go. And they are faster than us. They are very fast than us. But I discovered that most times you cannot answer questions on the terminology you does not know. It becomes difficult for you to answer questions on things you don't know. Even in objective questions where you have options. It's normally 4 options in the exam. But believe you me, if you don't understand the question, if you don't understand what the word inside the question, you can hardly answer it correctly. So that's why I bring up this idea of trying to go through the content one after the other to give you a clear understanding of what it is, what the chapter is talking about, before we can answer the exam. And before we answer the question, but if you go through exactly, if you follow us judiciously as we are doing it, if you enter the hall, definitely going to pass. Because you will hearing all that we are saying here, seeing them playing out in the questions. That's the truth. So in this example, it said, answering exam questions, pay attention to context to correctly apply technical definition. Of course, just like I said, maybe in the morning or before now, you do not, most of everybody, you see, let me tell you, everybody here, some professors are here. Let me see whether most of people here are doctors. They have doctorate degrees, so nobody's teaching anybody here. I'm just a moderator. Like Dr. Sonia, Dr. Sonia is not here today. Like someone like Dr. Sonia, who's a professor, how can you teach him? What are you teaching her? We are only doing demonstration. I'm just a moderator, we're trying to come together to make it easy for our understanding. Individually, everybody can read it and pass. There's no lie about that. But we come together to put the head together, describe things, and make sure that all of us understand it to our own limits. That will help us to pass. And when you go to the business, it becomes easy for you to start. So in the exam, we say do not pay attention to context to correctly apply technical definition. Do not bring your own definition there, because sometimes if you bring your own definition there based on your background, it may not be correct. So health insurance can be classified by who is covered, who provide the coverage, and the extent of the coverage provided. That is health insurance. Remember, in health insurance, you have hospital and you have medical. So these are the 2 things you have in mind. So policies may cover individual, families, or groups and vary in terms of their scope and specificity. The government is a significant source of coverage alongside private insurance. So there's some government health insurance program. that people can get to cover them for their health care needs. Of course, health insurance. I know there are some hospitals that give insurance that if you have them come to the hospital, you have reduced prescription payments, you have reduced treatment payments. So those must be in hospitals that have 401, 403B, that the people that can offer that, because they are non-governmental. However, indirectly, the government pay them back. So covered per year, what is per year? Who can define per year to us? What is per year? Sometimes I see it in the exam, honestly. Can anybody remember what per year is? Chapter 1, chapter 2, we talked about it a lot. Per year.
Loss.
Is that the loss?
Loss.
Danger?
Huh?
Loss.
Loss is per year. What caused the loss is the per year.
Anything can cause the loss.
Yeah, anything that causes loss is a per year. So what caused the loss is the per year. Sometimes they use it to confuse people.
Oh, what caused the loss?
Yeah, what caused the loss is per year. In every accident, there is a per year to that accident. So the cause of the loss or per year, that is the mean. So they can use cause of loss or they can use per year. Per year is the cause of a loss. So, for instance, it applies well in auto insurance. When there is an accident, there's always the cause of the accident. So the cause of that accident is the per year. And the insurance company always go to the cause of the accident, that is the per year. They do not go to the accident, they go to the cause of the per year, the cause of the loss, because they can get their reimbursement from the per year, not from the loss. For instance, if I have liability insurance, or maybe comprehensive, let me use comprehensive insurance, which means if I hit somebody, my insurance company repair my car. If they repair my car, they will ask me what happened. I tell them, ask me, am I at fault? I say no. If I'm not at fault, they say, all right, give me the information of the insurance company who caused the peril. Now, I give them the information. What they do, after they fix my car, they will go to the cause of the peril. The cause of the loss, which is the peril. That is the other person who caused the accident. That person is the peril that caused the loss. They will go to that person to recover whatever they have used to fix my car. So that is where it applied naturally. So the risk of loss due to illness or accident is commonly referred as the morbidity. That's the risk of loss due to illness or accident is commonly referred to as morbidity. Of course, everybody knows that. So illness, which is sickness or disease, illness, it can refer it as sickness or disease. That's illness. Sometimes we use the word together. We use them together, like illness. What is the cause of the disease? Or what's the cause of the illness? Or what's the cause of the sickness? It is equally saying the same thing. So illness, sickness, or disease. So those terms are what we see in health insurance. That's what we are trying to go through. So the probability or risk of getting illness or becoming disabled, whether due to an accident or disease, is morbidity. The probability of getting illness or the risk of getting an accident, an illness, or becoming disabled, whether due to accident or disease, is morbidity. So although a sickness or illness can be considered an internal occurrence, of course, it is an internal occurrence, it becomes obvious. It may have a sudden onset or developed over time. There's always onset of any illness. There's always an onset when it starts. And most, of course, the peril will cause the onset. Yes. So illness includes both acute infection and chronic condition. In some cases, an illness results from ongoing exposure to substances or condition at a person's place of employment, which are considered occupational disease. So remember, when you get injured in your place of work, there's a common insurance they give you. What is that? Anybody remember? If you have injury in your workplace, there's a kind of insurance they give that can cover you, take care of you.
Short-term disability.
Huh?
Is it not short-term disability?
No, not short-term disability. There's one name
Is it
called
workers' compensation?
workers' compensation. Yeah. Yeah. Do you know if you have a workers' compensation, you cannot be getting that and getting Medicare? I hope everyone knows that. Yeah. You cannot be getting the two at the same time. You get one and leave the other one.
Wow.
Or you cancel the workers' comp, then continue with your Medicare. So all these things are linked together. And until we know all of them, it becomes difficult for us to navigate. All right, so we're going to accident. An accident is what? Unintended occurrence. Of course, unexpected, unintentional. That is what accident is. It's not a deliberate act, but however, it can result to loss. So that's what accident is. So you look at it, say the peril, health, and accident policies cover our accident. All right, the peril, health, and accident policies cover our accident and sickness. True or false? So reason it well before you answer. So the peril, health, and accident policies cover our accidents and sickness. True or false?
True.
Why is it true?
Because is sickness not a cause? Peril is the cause. So can sickness cause me not to be able to work?
Of course.
So that's why I'm thinking
that's
true.
why any other person? We are 60.
I'll go through too.
You go through. So any other person taking through? Anybody taking false? All right, let's follow these two persons. So the peril, health, and accident policy cover our accident and sickness. This is true. So that's to test you whether you understand the meaning of peril. That's why they ask that question. All right. So another one is this. The other one is this. The risk of loss from illness or accident is known as mortality. True or false?
False.
False, I think.
All right, two people say false. The risk of loss from illness or accident is known
these
as
questions
mortality.
keep confusing
That
me.
one is mobility.
It's mobility. So they're trying to find out from this initial whether I understand it. That's why they're asking these questions. So it might look confusing. So illness, sickness or disease, illness, which is sickness or disease, can have a sudden onset or develop over time. Is that true or false?
True.
That's true.
So of course, every illness or disease have an onset. That one. Then I think this may be the last one. Say an accident is unintended occurrence resulting in a loss caused by an external source. True or false?
An accident is an intended occurrence. I'll say true.
True.
Because the term accidentally bodily injury implies that the cause and result of an accident are unintentional. True or false?
False.
The term accidentally bodily injury implies
I'll
that
say true.
True.
the two persons say true.
Unintentional.
It's
Oh, it's false.
Accident, see, accident is unintentional. Accidental body injury. When we do the definition, we don't talk about injury. So accidental body injury implies that accident that occurs as a result of one's action is unintentional, unforeseen, and even if the act was done intentionally. So,
why is it false? Because they say,
yeah, it's correct.
Yeah, accidents are unintentional.
Yeah, we are not trying to define accident per se. You know that But find
Oh,
the term accidental bodily
body
injury.
injury.
Yeah.
Okay.
All right. So now they have been able to try to get you into focus on what you're going to do on this. I think we will probably stop here. We're supposed to stop by 8 o'clock. We're going to stop here from there. Fortunately or unfortunately, tomorrow in the morning time, we're going to do annuity. For those who have not been to annuity class before, this will be an opportunity
I thought you said evening.
I mean, evening. I think even, do we agree evening?
Yeah, she said evening, right? The lady.
Or is evening? All right.
Yes, you said evening. Yes,
Or
sir.
evening time. All right. So in the morning, we're going to continue from covered losses. That's where we're going to continue from tomorrow morning. I have other class coming on by 9 o'clock. So I've joined.
What, if
We
I
have
may
teaching.
ask, what time you guys meet in the morning?
We meet 8:30 in the morning.
Okay.
So
The
that will
same
be
Zoom.
9:30 our time.
Yeah, 8:30 Central Time. 8:30 Central Time.
Yes.
Maybe around 9:30. Well, depending on
Okay.
where you live. But 8:30 Central Time. We meet every morning, 8:30 Central Time. And every evening, 6 p.m. The login remains the same. We do not change the login. It remains the same. Just whether I post it or not, 8:30 or 6 p.m., depending on the time you want to log in, you just log in. Whether I post it, but however, most times I post it. But sometimes I may not remember to post it on time. But however, the class still hold. Except there be a shift on time, then I will inform everybody. But if not, it's even the same. So that's where we end today.
Yeah,
Tomorrow
you said you were going to tell us something that we should all know about mortgage.
You said?
You said you had something to share if you stop recording.
All
right.
I have a question. How do I find it on YouTube?
All right. Just type in life exam review.
Okay.
All right. Did you check on I post some of them on
the links are on the group thing.
I put on the group. So if you click on that link, it's gonna give you all the series we have done. Yeah. Just put one or
can you share it, please?
It's on the group already. I shared it.
For some reason, I'm not in the group either.
Which group?
Let me copy one link and paste it here and see.
I'm not on the group.
Precious, you on the group?
Yeah, I am. Let me see if I can copy one YouTube link and paste it here.
I'm not on the group, please.
What's your number?
651 894 4718.
Did you post the recording for the weekend? I wasn't able to join.
I think I put the recording for the weekend.
This is Marie, and you keep telling me this like a week.
So what?
You say you posted today. I still didn't get nothing.
I saw some on the group today.
Some of them are there. I post some of them, I think in the morning. Either in the morning or yesterday night. I put about 2 there. Why I put the 2 is that if you click on the 2, it's gonna give you all other series there.
And my number 2, if you don't mind, I'm not in the group.
They keep putting me in other ones that I don't like.
So I'm gonna put you. I'm gonna put you on the.
Can you click on the link I put on the chat and see where it will take you?
All right. Let me see. So look at it.
That's it.
Did you guys see?
Sister Marie, click on the link. It will take you.
Click on the link. That will show you the whole thing. In fact, if you now go search, you will see. You just use. You see this one, January 2026 Life and Health Insurance. If you click on this one, put chapter 6. If you see chapter 6, put chapter 7, put chapter 11, put chapter 12. You see all of them there.
Yeah, it's all there.
So it's all of them. And look at this one. Look at this. This one is what? Chapter 9, annuity. So this is annuity. So all of them are there. Just go in. You can see as many as you want. Like this one we did today. This one we did, this Social Security, and the one we just stopped now is there too. I didn't put in the morning. I didn't put anyone in the morning because specifically I decided not to put. We discussed the several things that are not supposed to be online. I didn't say when we started Social Security, we talked a lot, and those I don't want them to be online. That's why I didn't record money on. So most of the time, anytime I want to tell ourselves the truth, we want to tell ourselves, because sometimes you tell ourselves the truth, we get to tell ourselves the truth. You don't need to go online. we're going to say things that we don't need to say.
You can get a lawsuit or stuff like that.
Yeah. So most times, we have that fear of not being recognizing what is good for the family based on our own community upbringing.
So, a question. So once I subscribed on YouTube, then I will be able to see all the other videos, correct?
Just log into YouTube. You do not need to subscribe anything. Or if you can subscribe, but if you don't need that. Just click like. That's it. You just go on YouTube. View what the YouTube is counting view. Just go and you get a lot of them there. Yeah, because you get a lot of you have all other life insurance teaching there. But if you basically want what we said and how we said it, you get it there.
Yes, sir.
So for those who are not in the group, like Kiyoma is not there, I'm gonna put her now on the group so she can.
And I'm not in the group either. But
what's your number?
The last time you took my number, I guess you got busy and forgot to add.
404. Okay, thank you.
Really? What's your name?
My name is Jamila. 404-732.
Jamila. 404.
Hey, Jamila, I have my namesake here.
Oh, your name is Jamila too? All right. 404-732. 3151.
3151. All right. I'm gonna put you and the Kiyoma now. Right.
Okay.
So
Jamila, are you gonna be in Dallas too?
No.
Oh.
Unfortunately, I wasn't able to take my exam, so.
No. You're making a mistake. It's not about, see, let me tell you. Some people are here who the exam is coming next week.
Yeah.
They make a flyer. It depends. It made a flyer, and they are speaking to people because remember, you're not taking your exam, but you have the ability to recruit people. You know that.
I didn't know that.
Oh, the person should not tell you.
Dr. Ruth just registered me and said I should study hard and go take it. And since then, I haven't heard from them.
All right. No, you can recruit people now that you already have a code. You have a code, I hope.
Yeah, I think so.
Yeah, not think so. You have a code.
You have it.
So it means that you can bring people to your business. You will be in Dallas. Bring people to Dallas.
I really wanted to, but I didn't plan family.
You can come and see. The Dallas event will tell you exactly what you're into. That's the best truth. The Dallas event will tell you what you're into. Whether what you're into is good or bad, the Dallas event will show you. And moreover, if you come to Dallas, you see that this thing we are saying is like a product. If you want to sell a product, you have to have product guide. Is that true?
Right.
All right. Some people who, people are so much educated that they want confirmation of everything. So such people, they want to ask you, this thing you're telling me now, where is it written? If you come to Dallas, you can be able to grab as many life insurance booklets as you like, so that you keep it for the start of your business. When you go, even some people that you talk to, you can give them pen. You can grab a lot of pen as you want. Give them pen. So, all right, look at what I get in the company when we go there. Give them booklet to read. All those things is what we're going to get. You may not get it except you go to programs.
Yeah, Dr. Ruth was willing to pay for my ticket if I pass, but from one thing to another, and I'm in school too, so it's really hard with 3 little kids.
Except the most difficult thing there is only the kids. The school, you can do your school everywhere. Anyway, as long as you're with your laptop, you can do your school. But the kids, most time, those things we see as being our difficulties are those things that push us to do these things we don't want. That's the truth. Because the little kids, they want a good life. Forget. Those kids want to be seen to be flying into Hawaii as they like.
Oh, yeah.
They want those life.
Yeah.
So it's only you that can provide that life for them. And if because of that, then you couldn't be able to do the things you would do to provide the life, then what happened? They will blame you.
Yeah.
So in other words, sometimes you can, I remember what those days when we serve little kids, what we do sometimes, we bring somebody to be in the house, be with them, we go our own way, go do what we want to do.
Wow.
No, yeah, that's what we do. Yeah, we bring them to be with them. We don't mind. Or if we get $200, $300, we give the person, so please be with them. Because sometimes, you remember, sometimes those kids, we love those life. And when you don't provide to them, when they see it, they become a big deal. Then when you begin to give them all those life, they see it as one of those things. And they work towards maintaining that best you have set for them. That's what life is all about. So if you can, find your way to Dallas. In fact, I've gladly, we have to, I think we have party on Friday. Probably, we're gonna, we may more sometimes have a section in Dallas if everyone will come. We have a section where we can use the board, use demonstrators to demonstrate some of these things we are talking about so that everyone can see it. Is a Dallas event is good for people. I think there was Dr. Pruitt even provide some people hotel accommodation if you're provided hotel, you're going for an event, they give you hotel accommodation for 2 days or 3 days you will stay. So don't remember for you to buy your ticket and jump in there.
Yeah, it was a good deal, but
it becomes easy for everybody who wants to attend. All right, it starts on Thursday till I think Thursday, Friday, Saturday. Then people can go back to their destination on Sunday.
Yeah.
All right, so see everybody tomorrow morning by 8:30.
So, Engineer Bat, my question is, there will be no class from Thursday to Sunday, right?
Of course, you can see invariably by people
are on Wednesday, or from Wednesday.
Wednesday, people are we're going to have a 7 meeting Wednesday in the office.
Okay.
So Wednesday, we may do Wednesday in the morning time, but in the evening time, it's not guaranteed. There may not be.
So after Wednesday till Monday.
After Wednesday, it should be till Monday. That's the truth.
Okay.
Yeah, because we'll be busy. We'll not get a chance for
Yeah, but this is really helpful. I really appreciate it because when I was learning on my own, it was like Greek, but you make it
of
more
course,
easy.
that's all it is. If you just like what I said, nobody's teaching anybody. We are just discussing to make it easier for everybody to grab it. That's the essence of doing what we're doing. It's not really everybody here are professionals. Nobody's teaching anybody. We are just discussing. In that way, become easy. Because remember, what you speak is what you retain in their head. Being somebody's food with there's a whole lot of job. I mean, job issues, family, this and that. Somebody's talking about 3 kids, all those things put together. Where do you have time again? So basically what we discuss now is the basis. Most people will go to the hall, they pass, and when they pass, what they are doing, seeing the questions resemble exactly the discussion we are having. So that's what it is. So it's good to put head together to get it done. A lot of people have passed. I think last week we have about 3 people that passed. So almost every week we have 3 to 4 people pass.
Okay,
That's
so what were you gonna say about the mortgage?
Eva, I
want to, I'm interested. It's not only here.
Eva, I want you to write to register for your exam. Eva, I've been here, disappear. Now she come back.
He's gonna talk about it in Dallas. Whoever makes it to Dallas,
I'm interested.
Oh no,
interested.
we have to talk about it here.
I wanted to ask that question. So
Exactly.
I know the soldier man saying what the conversation be done. So all right, there's some things we're gonna say at Dallas, and maybe that'll be one of them for those who be in Dallas. I know about 6 people or 7 people. Eva, are you not coming to Dallas?
No.
Upon the hotel that we provided for you?
I'm sorry.
I know after today you will disappear again to come back next month.
How did you know?
I know.
I'm really crazily busy, but I want to get this done and I'm trying really hard.
Yeah, there's no way we can get it done rather than, you see, everybody here is busy.
I know that I am carving out some time.
That's the truth. Everybody, and if that thing you think that is holding you forth is the main reason why you should do this. That thing that is holding you tight, that you don't have time. Honestly, that is the more reason why you should do this.
Yeah,
You never know. You never know whether your retirement will come from here. Your early retirement may come from here. That is the basic truth. Because most of these people you see now doing good in their business have retired. That is the basic truth.
I can't wait till that happens.
No. In fact, if you come to Dallas, you will say, what have you been doing since? God, what is this? What have you been? That's what the question you'll be asking yourself. What have you been doing since? Because see those who are professionals, see doctors who they are deep into the business, making good money. They don't have time to go and answer somebody. I mean, doing all that. They don't have time. Some Some nurse practitioners that have clinic close off their clinic because it cannot give them what they are getting by seriously being in the business. So a lot of things are happening. So it's only when you are there you can know. And we have 2 big events every year. I mean, up to 2 big events. One is this championship ball, which happens once in a year. Then another one will be that of Las Vegas, which will be in July. Then in the middle of it, we have hierarchy. We have events coming up Missouri. We have another one coming up at Austin. That should be November, October. So these are the 2 major ones that starts Championship Ball February and the Las Vegas July.
Okay.
Yep. All right. So I'll see everybody tomorrow morning for those who will be join ever until when you come back. I know you're going back. You're going to where you come from. Until from next month. We'll see you next month ever. All right. See you everybody. Good night and happy.
Good night. Thank you.
Bye.
Yeah.
Thank you.